Welcome to today's session and thanks for joining. In these live sessions, I demonstrate a technique for swing trading profitably in any market condition by taking only high probability and low risk trades. I am Sagar Nandi. I am an active trader using only one trading system, Q. Disclaimer: this demonstration is for educational purposes only. I am not an investment advisor. It is not a trade recommendation. Trading involves risk. You and only you are solely responsible for the outcome of your trades. Options trading can be risky. You may refer to the characteristics and risks of standardized options document from OCC to decide if options trading is suitable for you. Q runs on Metastock and TradeStation platforms. Instruments that often move the market. Dollar index. It is in a downtrend. If this watermark support is regained, then it will create a false downside breakout. It is at a very low price. Regaining of the watermark support will allow one to be bullish using the box buy setup. I see that in the past at the same level bullish headwind had come earlier and now also it has come once again. Until the watermark support is regained, it is continuing to be bearish, but it is too late to short. Mega cap custom index. These memory trendline supports are very robust. The weekly trendline support held beautifully, created a shallow false downside breakout and it rallied. It stopped right at the trendline resistance. The support and the resistance both worked beautifully. Now it is showing red color candle in daily, so it doesn't allow buying. If this trendline resistance, multiple of them, if they can be broken to the upside, then I will be bullish. If it starts to go down from here, there will be a case for taking bearish trades till it reaches the trendline support again. Right now, there is no trade setup in Mega Cap Custom Index. Market breadth internal health check. Usually the market follows the internal health, not the other way around. Total view, the broadest view of the market. When it became extremely oversold in terms of 3-month new high low, thanks to Dr. Jeffrey Scott, after watching whose videos I incorporated it in my trading system, and it also hit a much more rare oversold condition in percentage of stocks above 50-day moving average. Then I was willing to buy reversal trades. That worked. I mentioned in the previous market recap that when price rallied on this day, I did not buy on that day near the close. I had bought earlier and I booked some profit. In the last market recap, I mentioned I was not buying. I was not shorting also. This was a holiday shortened week. On Wednesday, there was a Phoenix signal. That is a bearish pressure signal. If the Phoenix is followed by an eureka signal, that may be a buying time. But right now, it is not allowing to buy. You can see last two trading days, it had indecisive shape candles, more so on the last trading day. The USA total view using weekly daily, it is still in a downtrend, does not allow buying right now because the candle colors are red. If it continues to go down from here, then the next support is quite far away. There will be a case to take short trades provided we have a close below the low of this day's candle. If it goes to the upside, I'll have to wait until the trendline resistance is broken before deciding to take long trades. Weekly is neutral. I'll not look at the other market breadth charts for composites and major indexes. They don't provide any new signal this week. External view, this is how most people around the globe see the market. SPY, in both weekly and daily, the trendline support held beautifully. That is why when price came near the support levels, and because of the fact that 3-month new high low and percentage of stocks above 50-day moving average were extremely oversold, I was willing to buy at that point, and that worked beautifully. Now it rallied. Last week I was not ready to buy. I mentioned that in the market recap. That was a good decision because price fell a little bit. Last 2 days have very indecisive shape candles. Red color on the last trading day also. Doesn't allow buying. For me to buy, it has to break above the trendline resistance. If it continues to go down from here and can take out the low of this candle, there will be a case to take short trades because the next support is far away in both weekly daily, far enough to take some profit in swing trades. QQQ, similar pattern, does not allow buying, has to break the trendline resistance before I buy. There is a case for shorting if it goes down from here. Dia, this is weaker because the backdrop color in weekly has changed to bearish color. Otherwise, the patterns are the same. IWM, it is looking stronger relative to the other market ETFs. We also have a bullish indecision at the bottom in weekly. The daily candle is more bullish than in the other market ETFs. Having said that, it is still in a downtrend. The entire market is in a downtrend, and there is trendline resistance nearby. So I am going to be very cautious buying stocks even if IWM starts to go up from here. It will likely find robust resistance from the memory lines. The external view is saying not to buy, not to short, and wait. Bucket analysis, again, I incorporated it in my trading after watching Dr. Jeffrey Scott's videos. Thanks to him. Pinpoints reversal points with remarkable accuracy. Bucket analysis in QEdge. 77% of stocks are still below mid Bollinger Band, that is a bearish market. However, it is not extremely oversold. It is bearish, so of course there is no case for being overbought. If at all it supports, shorting does not allow buying. Sector industry stock breadth shows where the market came from, where it is now, and where it may go next. Long term 1 month bearish, long term 10-day is also bearish, 5-day turned bullish, 2-day turned bearish, neutral to bearish, and 1-day is bullish again. It is flip-flopping from red to green to red somewhat to green again. If the flip-flop continues, we expect next week Monday to be bearish. If the bullishness continues and if the trendline resistances in multiple market instruments are broken, there is a case to buy. If it comes down next week, maybe Monday, there is a case to short. Right now, no clear signal from here. Technical breadth, important because we profit only buying stocks going up, shorting stocks that are coming down. Weekly technical breadth, bearish across, sorry, not bearish of course, bullish across the board. This allows buying. Daily technical breadth is also bullish overall, allows buying. Market level summary, the most important decision is whether and where to buy or short or whether to stand aside. My decision this week is the same as was in the last week. I'm not willing to buy, neither am I willing to short. I'll be able to buy if the trendline resistances are broken. I'll be able to short if it takes out Wednesday's low in multiple market instruments. Last week's trade ideas, I didn't share any trade ideas last week because of my market view. I did look at two stocks. One was ACMR, a semiconductor stock. Another one was a pharmaceutical stock, healthcare stock. This is ACMR. Slightly went up this week, though it closed with a bearish shape candle. The trendline support in daily and weekly, which were the basis of me finding these two stocks, they are holding. If it goes up from here, gives a bullish flow candle, that may be a case to buy, provided my market view turns bullish. Right now it is not bullish, it is neutral. In any case, ACMR slightly outperformed the market SPY because it went up slightly, but it is not a trade that I took, and neither did I take CPRX. The trend line supports were again the basis, one of the basis for identifying these two stocks. Those supports are holding, and this stock also went up slightly this week. This closed with an indecisive shape candle. Again, if it goes up from here, there may be a case to buy this stock, provided my market view turns bullish. This week's trade ideas, like in the last week, I am not suggesting any trade ideas or looking at any trade ideas, but let me carry out a bottom-up analysis. Last week I carried out a top-down analysis. There are some bullish candidates at the stock level. Let's go to the bullish stocks. There are many ways these tools can be used. I'm going to look for the breakout setups, Q setups, but not just breakouts. I'm going to match them with momentum signals. What momentum signals? MOBO breakout from a squeeze. Only two stocks are remaining. Let's open these two stocks. Close dollar index. This is ODP. Okay, I'll come back to that. Next one is GEO. Both look somewhat interesting. Let's look at them again. This time using weekly daily. ODP. Okay, the weekly daily is looking even more interesting. The weekly is looking bullish. After a long time, the weekly closed with a bullish shape, bullish color candle at very low price level, and we had big move up 3 a couple of days earlier. It broke out of the trend line resistance at price extreme low. Big move up 3 was already there. So it could be a buy candidate as a stock because it is breaking out, and it did regain this watermark support level, thereby creating a false downside breakout. Let's complete its 360 degrees analysis. What is ODP's fundamentals? Let's look that up. It is at a very low price level. We don't expect such stocks to have high earnings growth. That is the case, but it is undervalued. That allows buying. On the last trading day, it went up by 4%, steadily going up. There is a short squeeze potential. What about this stocks industry? Let's find the stock industry scorecard, not stock scorecard, industry scorecard. That is also looking interesting, meaning bullish. It's not only one of the strongest, it is also one of the most accelerating industry. On the last trading day, it went up by more than 2%. So ODP could be a possible buy candidate. The next one was GEO. Let's look at it using weekly daily again. This is certainly stronger in terms of price pattern because it is not at price extreme low, it is at price extreme middle. It broke out of the trend line resistance in weekly and daily both, but the weekly closed with an indecisive shaped candle. Still, it has two successive weeks of bullish move when the market was not doing that. That is bullish. Daily also broke out of the trend line resistance. If the stock continues to go up next week, if the market view turns bullish, this also may be a buying candidate. Let's look at these stocks, fundamentals and industry score. Here the fundamentals are not so good. Earnings is negative and it is not undervalued as well. Dividend yield is not there. So I am not interested in buying this stock. I am trying to align more and more forces with my trades. This does not meet that criteria. So I did not care to look at the industry, because even if industry for Jio was bullish, the fundamentals did not allow me to buy. So ODP will be a possible buying candidate, that will be a bottom fishing candidate, where the weekly daily both are looking bullish for a swing trade. And if it works out, it may be a stock to hold longer term as well. In any case, my market level view is not bullish, so I'm not going to, I did not buy it on Friday. I may not buy it on Monday unless my market view turns bullish. If you carry out the 360 degrees analysis using Q like that, you will most likely find other trading candidates today at stock level, at least, just as you would almost any other day. Thanks a lot for joining me. I look forward to seeing you in my next session. Have a great weekend. And as I always say, as these live examples, I'm quite confident shows, there is no reason not to do that. Trade profitably. Thank you.